hope you're all doing well. Today I'm going to be breaking down this trade right here. I took this trade on the 5-minute time frame on GBPUSD and I made around $350 on the SFT challenge account. So without further ado, let's get straight into the breakdown. As always guys, I always start off on the 4-hour time frame or the daily. In this session I'm going to be starting off on the 4-hour time frame, and what can we see here in this data over here? We can see that overall price was trending downwards. We were creating those lower lows, lower highs, lower lows, lower highs. So basically we had this zone sort of get respected. Let me quickly change that to a supply, and we also had this zone being respected as well. So this zone was looking a little bit weak, but it was still holding. All right. The reason I say this is because this was one of those trades where I like to call them 50-50 trades. I think the price could go towards the downside here, or it could potentially just keep going up as well because of what we're going to see on the 1-hour time frame. So I had this in my mind. On the higher time frame, on the 4-hour time frame, I was thinking that price could potentially create a new lower low. However, when we looked at the 1-hour time frame, I could see that the market looked very, very bullish. What did we see here? We saw that the previous low here got liquidated. So all the stop losses below this low got taken out. And then we had a nice bullish move towards the upside. And then we had a small retracement. And we had a good reaction off of this 1-hour zone right here. We can see this on the 15-minute time frame right here. If we mark out this zone right here, we can see that price came into the zone and then we had a nice reaction off of it as well. So the reason I was considering buys at this area was because of one thing, and that's called different market phases. So the market works in two different phases when the market is trending. Those phases are phase 1 and phase 2. Let me quickly draw them up and I'll show you guys what I mean. There we go guys. As we can see, this market is trending upwards, and like I said before, price moves in two different phases, phase 1 and phase 2. So phase 1 is basically the direction in which price is moving overall. Price is moving upwards here. Therefore, phase 1 is price actually moving upwards, and phase 2 is the retracement. It's the pullback, and once that pullback occurs, that's the end of phase 2. And we go back to phase 1 when price expands again. Okay, so those are the different phases. So when we're looking at the markets, if we're looking to buy, we want phase 1 to be stronger than phase 2. If we see that the phase 2 is stronger than phase 1, then we don't want to enter the trade. So let me show you what I mean on the chart, right? So here we can see that price moves up very aggressively. This is phase 1 if we're looking to buy. Phase 1, and then phase 2 is price retracing back into the zone. And we can see that all of these pullback candles are a lot smaller than these candles right here. Therefore, phase 1 is stronger than the phase 2. And if we look at how much time it took for this high to be printed versus how much time it took for price to come back into this order block, you'll see a big difference in the numbers. So price was at a low at 10:45 p.m. on Friday, 6th of October, and then it hit the high on Saturday at 1:30. So it didn't take that much time, only a few hours. Whereas, how long did it take for this pullback to occur? It happened all the way on Monday night. Do you guys see that? We can see that price actually took a lot of time to come back, as opposed to going up there and creating the new high in the first place. This tells us that price may be ready to move towards the upside because it's moving up so aggressively. So when we look over here, what are the different demand zones that we could look to enter our trade off of? Well, I could see these two. This one right here and this one right here. So these are our two different demand zones. So which demand zone would I personally prefer? I always say I prefer the more deeper discounted demand zones, which would be this one in this case. However, just because this one is more discounted doesn't mean it's going to be the one that holds. Sometimes price retraces into these types of zones and then it reverses off. So you have to be ready for situations like that. So let's see what price does at around London session. At this point of time, it was around 2:45 p.m. and where I live, London session starts at around 5 o'clock. Well, exactly at 5 o'clock. So let me quickly forward price to 5 o'clock and we'll see what happens. There we go guys, we're now at 5 o'clock. Alright, let me go down to the 5-minute time frame because this is where I look for my personal entries in the trade. Alright, then now we're at the 5-minute time frame. And what can we see? Do we want to be looking at the past few days data now on the 5-minute time frame? No. All we want to do is basically zoom in to the last few hours of data. I literally only want to be looking at this much data now because I've already done my top-down analysis. I already know what price is trying to do. So now I'm just going to focus on this analysis right here. Keeping in mind guys, sells are still an opportunity because price is on a big supply zone that we have here. I'm going to delete it for now because it looks a bit weird, but you guys know that now. Price is on a supply zone, but bulls look very strong right now as well. So what do we see here? We see that price creates a lower low, lower high, lower low, lower high, lower low, lower high, and we get another lower low. Let me quickly draw that with some arrows. So now that we have this sort of structure, what are we waiting for? Well, we're waiting for the previous lower time frame high to be broken before taking a trade. So we see this previous high right here. So let's see, does price break this high or does it create a new lower low as well? Let's see what happens. Alright, so as we can see, price is right here. Let's see what happens now. This is going to be key because it seems like price is retesting on this zone of supply and potentially price could continue to go down lower or it could go up higher. There we go guys. As we can see by this candle, price is now closed above the previous high right here. And a big cherry on top was that price had actually closed above this high as well. So this is basically where we can enter our trade, or this is where I entered the trade anyways. So what do? I kept my entry right here, market execution. I kept my stop loss below this previous doji candle, or second last doji candle, and the TP was up here. So one thing I wanted to make clear is I could have kept my stop loss down here. This would have been a safer stop loss, but if I do that, then I do compromise a bit on the risk to reward ratio. And the reason I had my stop loss here was because, well, there was no imbalance here. We saw that there was a good zone, a good candle. Then we had a bit of a consolidation, and then we had another big candle. So this is why I had my stop loss down here, because this zone was a bit of a consolidation. Now that we have this, let's see what price does. There you go guys, TP is hit, money is secured, and here's the proof of entry again. It's always nice to make a little bit of money on the challenge accounts, gives you a bit of confidence and you can keep going on with it. That's it guys, hope you enjoyed the breakdown and I'll see you guys next time.